Well, good evening. We're going to get started now. I want to welcome everybody to tonight's webinar. Last week, we covered the foundations of investing in multifamily syndication. Tonight, in part two, we're going to go over evaluating and vetting the sponsor slash operator. Those of you who've spoken to me in the past know that when I go over Break of Day Capital's multifamily investment opportunities, I always have started with going over our sponsor operator, Gary Lipsky, and the team's track record first before I get into the deal. The best way I think is to describe it is, when you're looking at a multifamily investment opportunity, you're investing. A lot of people like to say you're betting the jockey, not the horse. You're investing in the driver, not the car. And a lot of different terminologies for it, but it's all the same. You're putting your money with the sponsor and the operator and their team first, the deal second. Last week's webinar, we had a lot to cover, a lot of new terms and definitions. So my colleague Jacqueline and I, we took questions throughout the seminar and answered them as we went along because we wanted to make sure that you were very confident and understood every topic well before we decided to move on. Tonight's webinar, we're going to wait to the very end to answer questions. However, at any point you have a question, below on your screen, the Q&A box, you can enter a question. We'll get to it at the end. So at any time you have a question, feel free to type it in there, and we'll answer it at the end of tonight's webinar. So getting started, just my background. I spent over 20 years on Wall Street. What I did was I covered some of the largest and best performing hedge funds and mutual funds and family offices as a sales trader. And before I joined Gary Lipsky and the team at Break of Day Capital, I was a multifamily realtor and I did deals throughout the state of Arizona. And I love webinars and I love doing this. Really, what my favorite part of this business is building relationships, making connections, and helping investors realize their financial goals through real estate investing. A background of our team, what we do at Break of Day Capital. We acquire underperforming multifamily investment opportunities and properties throughout the Southwest. And once we do, we implement repositioning strategies, best practices, and maximize value for the shareholders. Some of our accomplishments you can see below. We were recognized in 2023 by the American Apartment Owners Association, which has over 140,000 members, as the best real estate syndication company. Inc. magazine recognized us as the 25th fastest growing real estate company in 2023. And we have acquired over 1,600 units with a value of over 280 million in the last 4 years. Our sponsor operator, Gary Lipsky, hosts a weekly podcast. You can find it if you have an iPhone. It's on the Apple app for podcasts. And he's also written a book called Best in Class about multifamily investing in real estate. And I highly recommend you check it out. If you go to our webpage, you can get a free copy. You just have to pay for shipping. So when vetting the operator, one of the most important things to do is to look at their track record. Experience does matter and the first question you should ask them under experience is, how long have they been investing in real estate? Our operators invest in real estate for over 2 decades. And so why is that so important? One line we used to use on Wall Street all the time, which I love, is do not confuse genius/brains for a bull market. When times are good, everybody looks great. There's outperforming, but it's tough times that really makes people stand out. So you want to make sure that the operator has been investing through economically challenging times. A good example of this was 2008 during the financial crisis when there was a major real estate bubble. How well did they do during that time? Did they pivot? What did they do? Full cycle experience. When you purchase a multifamily property, what happens is the next phase is renovations, then the stabilization, and then the property is sold. That is a full cycle. So you want to check with the operator and their team and see, how many deals have gone full cycle and what were the results of those full cycle properties. And when we ask, what is their niche experience? You want to make sure there's so many different ways of investing in real estate. There's condominiums, single family rentals, industrial space, triple net lease, multifamily, mobile home parks, self-storage, tons of different ways to invest. So you want to make sure that the operator and their team are really focused on a certain niche. If you were, we focus clearly on multifamily, but if you were getting from an operator an email, 1 month, hey, we got this great multifamily investment opportunity, and then the next month it was a mobile home park opportunity, then an industrial opportunity, and then a self-storage opportunity, they're most likely spread across too many markets and are too thin. So that is a warning sign when someone is really spread across too many different markets. And when you look at their track record too, a great question to ask them is, what is their portfolio assets under management? That's what AUM's acronym stand for. In our case, we have over $280 million of assets under management. So a couple tips when you are vetting an operator and their track record. And you should ask these difficult questions to them and ask them, have they ever declared bankruptcy? Have they ever lost investors' money? Have they ever issued a capital call? A capital call is when the property is underperforming and you have to ask the investors for additional funds. Have they ever paused distributions? And if the answer is yes, it's okay, but make sure they explain what happened and how they dealt with the situation. And another tip too is discern between the deals they were the operator and took lead sponsorship role and those which they were passive investors or capital raisers. For example, is often it's not uncommon for a fund to say, oh, they have 3,000 units nationwide, when they personally are not the operator on any of them. They have passively invested in other people's syndication, but they're not the lead. They're not taking full responsibility. So definitely you want to discern between those two different types of investing. So the management team. Every sponsor operator needs an excellent team of professionals to support them. So with that, on every company's webpage, they should have a list of all the team members, their backgrounds, and defined roles. An example is, myself and my other investor relations colleague, Joseph Fang, both of our backgrounds on Wall Street. We have dealt with, spoken to, and numerous investors over our course of our career. So we clearly have a great background role for that position. And likewise, my colleague Sean, who's the chief operating officer, he worked at Google for many years, managing teams. So he's an ideal fit for this chief operating officer position. So you just want to make sure that their backgrounds are there and they match the defined roles. And one quote I've always loved is, you are the average of the 5 people you spend the most time with. There's other variations of this quote. Show me your friends, I'll show you the future. But this is something I truly believe in. You want to surround yourself with the best talent. And so it's imperative for a great operator to have a great team, but be with them to really support their day-to-day operations and long-term investment goals. Communication. Transparency is vital in multifamily or all investing. And think about it. Multifamily, it's an illiquid investment. Your money's tied up. You want to make sure that they're giving you excellent transparency, telling you how the deal is going, And if there's, if it's outperforming, great. If it's not performing as well, what's going on and how they're pivoting or adjusting to fix the situation. You want to be certain that all your questions and any inquiries you have are responded to on a reasonable time basis. As the investor relations manager of Break of Day Capital, my goal is I want to get back to every investor who sends me an email, calls me, leaves a voicemail. I want to get back to them hopefully within an hour. But worst case scenario, if I'm tied up all day, I will definitely give them a call by the end of the day. Frequent and consistent updates too. At Break of Day Capital, all the properties we have under management right now, we send out a monthly update on each and every one, and tells you how the property is doing on a monthly basis, and also we say ICD, inception to date, how it's doing since we acquired it, and how it's doing versus our pro forma model. So if it's underperforming, we tell you exactly why. Usually it has to do with occupancy rates. If there's an uptick of people, leaving the property, that's why. We often will tell you how we're going to address the situation. Sometimes we hire someone to be on the property full time to help with leasing. And the flip side too, if the property's outperforming, we'll let you know why as well. That too also usually has to do with the occupancy rate as well. Every multifamily syndicator should have an investor portal with documents as well. On our investor portal, we have all the subscription agreements, your K-1 for the taxes, and also the financial documents for the property is uploaded on a quarterly basis. The P&L, the rent roll. The rent roll is a very vital document for multifamily. And lastly, just make sure all your questions are answered. There are no stupid questions. There are no silly questions. They're just questions. This is your money, you and your family's money. So make sure that they're answered and you feel very comfortable once they are. So trust but verify. Once you've had these initial calls with them, definitely check out their online presence. Every company should have their own website. Every company definitely has a LinkedIn profile and other social media presence as well. And usually there's podcasts as well. Gary, as I mentioned, does a weekly podcast. There's been many other podcasts as well. Also, make sure their mission statement and core values are aligned with you. Our core values are integrity, transparency, communication, diligence, and Kaizen. Kaizen's, the one term many of you may not be fully familiar with, but that's a Japanese term that refers to constant improvement, changing for the better. And we all certainly believe in that. If you can meet the operator in person, fantastic. I live in Greater Phoenix, so I've certainly met investors face to face many times, but our investors are nationwide, so it's not often always possible. So if not, do a video call. I do many video calls with investors, and Gary does as well. Ask for referrals of personal references. Over 60% of our investors have done more than 2 deals with us, so we have a great network of references for people to get in touch with. If you ever ask for one, they should definitely provide them for you. And trust your gut feeling. Think about your gut usually is pretty accurate. Think about how many times you had that new colleague at work that right away you got a bad feeling about them and it turned out to be correct. And vice versa too. How many times like somebody walked in the door and you immediately fell in love with them, had a great feeling about them, and you went on to be great friends. So in Trust But Verify, one thing, an ethical sponsor should be just as concerned about you and your financial well-being and risk tolerance, as you are. And that is, I think, imperative about an ethical, sponsor. So an example of this is, if you ever came to me and we talked and immediately afterwards you said, great. Here's, I have $700,000 of, liquid money right now. I'm going to give you all of it to invest right away. If you said that to me, I would just immediately say, time out, time out. Let's talk about this. Let's go over things. Is that the right decision? Will you need any of this money? Will you need liquidity in the near future? Let's really go over things. One investor who I spoke with, we did exactly that. And the example I'll give you is, he was working, he was making a excellent salary, did not need any of his liquid savings for his day-to-day living at all. And the number of his liquid assets was 1.2 million. So I said, okay, let's figure out, tell me about your future right now. You clearly do not need any of this money to live, but what are you planning on doing in the near future? Do you have any tuitions, college tuitions you need to pay? Are you planning on making any big purchases? And he was hoping to move to Florida in the near future. So we figured out the price of the house he was going to acquire, and the renovations, and keeping some money on the sidelines as well. And after all that was through, we figured $200,000 would probably be the right amount of comfort that he should have to invest with us. And after that, he said, "Listen, let me give you $100,000." So that's an ethical sponsor. We'll do that. And I certainly could go over that with anybody who had any questions of what would make an ideal investment with your circumstances. So skin in the game. Immediately, always ask an operator, if you're looking to invest with them, how much money do they personally have invested into the deal? And in our case, our most recent acquisition, Spanish Trail, Gary has over $1 million invested into the deal. You want to make sure the operator has their own capital at risk, well beyond what they're collecting in fees going forward. And I'm a firm believer that the operator, people are going to work a lot harder when their own money's at stake when it's not. So clearly, you want to make sure the operator has a significant amount of money invested into the deal. And it's a bonus too if the employees at the company are also investing into the deals as well. And at Break Everyday Capital, we are. As in the last line there too, an experienced operator, has a reputation to protect. So you just really want to make sure that they're heavily invested in every single deal that they present to you. So related to skin in the game too, before, we talked about, distributions, pausing them. One thing you want to be a little weary about too is when you look at some of these deals, if sponsors are giving distributions immediately, consistently, you want to be wary of that. There's no situation here where they're robbing Peter to pay Paul, which is a Ponzi scheme there too. Usually with a multifamily property, as we said, the full cycle, the first part of it is after you acquire it, you renovate it. That costs money. And usually in our deals, Spanish Trail, our most recent acquisition, we don't expect distributions to start until, best case Q4 of this year, because there's work that needs to go into the property. So be wary when somebody is immediately offering or saying they're going to pay distributions. They very well be robbing from Peter to pay Paul. So market criteria. When you're investing with an operator and vetting them, you want to know what makes them want to invest in a certain, market. And, the first thing that we look at is, they call it the MSA, the Metropolitan Statistical Area Size. And, one of the reasons we've done so many deals in Phoenix and Tucson is, Phoenix is the fifth biggest city in the nation, but also Tucson, it's a city that, most people have heard of, but not too many people are aware of. It has over 1 million people in it. It's a very large city as well. In these markets people invest in, you want to make sure there's above average population growth and wage growth. Phoenix and the whole entire state of Arizona right now is booming with population growth, and wage growth is continuing as well. And business landlord friendly. I was born and raised in New York City. I love New York. However, I would never want to have a business or own an apartment building in New York City. It is not business or landlord friendly. If tenants, it often takes, it could take over a year to evict somebody. So you want to make sure that the investment, multifamily investment, is in a state or city too that is business and landlord friendly. Arizona certainly is. You can evict somebody with relative ease in this state. Diverse employer base too. You want to make sure that the city is not reliant on just one specific industry. For example, Phoenix and Tucson, we love about them is it's a very diversified economic base. There's a lot of jobs in, well, obviously real estate. There's a lot of healthcare jobs. There are a lot of manufacturing jobs. There are a lot of financial service jobs. The tech sectors have really started to look at Arizona as a great place, pretty much due to the climate. So you want to make sure that there's a diverse employer base. So if there ever is a major hiccup in any specific sector, it's not going to take the entire city down. Related to that too is a great sign for a great market is that there are large hospitals, financial services, mentioned large banks there, and blue chip companies, Costco, Walmart, Whole Foods, companies like Costco, Walmart, and Whole Foods, now owned by Amazon, they do a great job of demographic studies when they choose to go into a city. So it's a great sign when you see companies like this in a marketplace. You want to make sure too that the income range is ideal for the rent levels. For example, Tucson right now, the average household income is 80,000-ish right now. And our most recent deal, Spanish Trail, we expect the two-bedroom units, the large two-bedroom units, rent to get up to $1,395. And that is a level that, a family certainly making $80,000 could afford. And likewise, too, in a lot of these cities, home prices are getting too high. So it's with interest rates where they are, it's more expensive to own than rent. So that's also a good sign for an area as well. Affordable cost of living. Both Phoenix and Tucson are very affordable cities where people can not just afford the rent but have their car and have a nice living. So that's another good sign for a market to invest in. Looking at crime statistics and school ratings, every city's got the good parts and bad parts, but you do want to stay away from certain areas where we know that there's high crime and horrible schools. And the last line here on this page, what I think is pretty interesting, is the absorption rate of new properties being built. There's a lot of new builds in both Phoenix and Tucson, but the population growth is overcompensating for that too. So these new units are being able to be absorbed. So there's not a glut of housing in the marketplace. But also too, what's important to know about that too is, our properties are much more aimed at blue collar workers, while most of the new properties we're seeing built is A-class into young professionals. So infrastructure too, looking at a city, it's also great. You want to make sure the apartment is close to major highways, airports. Both Phoenix and Tucson do have international markets, but also convenience. Is it close to a good retail shops, grocery stores, and entertainment? And to sort of put this all together, as the tip here, it's just really critical to be in a growth market with strong fundamentals, to enhance the success of executing a value add strategy. Last week, what we talked about, the net operating income, what's great about multifamily is an investment is the property is based off the net operating income, the value of it. And this is something that a great operator can drive, can increase. but it's very important that it's in a strong market where this can be accomplished. So that concludes tonight's slide presentation. We're going to open this up to questions. However, before we do that, just want to remind everybody here that I am, talked about accessibility in these, last two webinars. That's what I'm here to do. I love talking to investors and answering your questions. You can schedule a time to do that with me. I can be reached. My email is adam@breakofdaycapital.com. And my office number is 602-529-2056. So at any time you'd like to schedule a call or just want to have any questions, obviously we're going to open this up to questions momentarily, but feel free to reach out to me. And I said there's no such thing as a super silly question. They're just questions. And Break of Day Capital, myself and my team, our goal is we want to make you extremely comfortable and excited to invest with us. And we do that through answering questions.